Let me now welcome Mr. Ashwini Bhatia, Managing Director of State Bank of India, and we'll be spending some time with him today trying to understand that all the good work what State Bank of India is doing, why exactly markets are not recognizing that. Mr. Bhatia, it's the first time we are interacting in 2021, so slightly late, but never too late to change pleasantries. Wish you and your team a very happy new year.
Likewise to you too. Happy New Year to you, your team, and all your viewers.
I'm going to start first with the big macro question, which is that if I look at the Reserve Bank of India and their latest report on where NPA trajectory is headed, RBI feels that the NPA trajectory is going to be higher. Now, they've been wrong in the past in their estimates, but this time, do you think they're close to the mark?
Again, too early to say because RBI would have its own models on sensitivities. when they do their stress tests and so on and so forth. But on the ground, the situation for the moment, at least, is not as alarming as RBI has suggested. Where they have talked of a figure of around 14% NPA on the gross book. So whatever we have been saying in the past, I think that kind of holds. But just to add, so maybe the talk and discussion this time was stress on the retail book. So there the collection efficiency still remains around around 96%. We haven't seen any spike on the housing or the personal or the unsecured or the auto loans. The corporate book is holding up very, very well. And here I'm talking about the large corporates. I'm also talking about our commercial book. That's holding on pretty well. So I think we'll have to wait and see. I'm sure RBI has done its stress testing, the way they do it. Maybe they have more data than us. But right now, on ground, I think we are pretty well placed.
So let's look at the other side of the equation, which is that based on your initial comments, is there a large scope for SBI and for the banking sector actually to start writing back the provisioning? Because all banks have done a very strong COVID provisioning. The on-ground reality is not that bad, the numbers you've already shared with us. What are the chances that we could see a reversal in provisioning, something which markets are not anticipating?
So I can only say of State Bank of India, we did some upfront provisioning in the first half of this fiscal. We will let it remain that way. And we had also said that the total restructuring and the total NPA accretion for the year would be 60,000 crores plus minus. So the write back of provision, of course, also happens automatically in the sense that the stressed book is also giving us some recoveries. So that amount itself is, say, between 7 to 10,000 crores every year. So automatically that comes to the bottom line. So to that extent, yeah, you are right that some write back in provisioning may happen. And if a few of the large assets that are, ready to move to the new owners, if that happens, more recovery will come to the banking system.
If I look at the tone of commentary which has come from Ultratech or Tata Group of companies, or even for that matter, South-based groups, all of them are now indicating that big corporates are on a verge or on a cusp of starting a new CAPEX cycle, whether it's brownfield or greenfield, at least they are indicating and talking. Has that translated into large credit offtake for State Bank of India so far?
No, on the large corporates, I think people are still waiting, but we have seen a couple of proposals coming in. and and the good part is that they are all on the manufacturing side, so which is good, and that is in line with the government's vision to make India Atmanirbhar. That is number one. But let's keep the perspective in mind. I mean, let's be clear, right? Before the pandemic, we were growing at between 4 and 5%. We had a terrible quarter, first quarter of this fiscal, where we degrew by 24%. And as the recovery takes shape, there is still surplus capacity within the system. So it's very early to say that the capital cycle will resume immediately. That may take a little more time. But yes, some of the companies you mentioned, Ultratech and all, they're cash-rich companies, fantastic companies, very well managed. They are going in for capacity utilization, which would indicate that on ground, things are much better.
Do you think there could be a surprise coming on the working capital front also, because the economy was contracting, working capital requirement was not there, and working capital loans are normally easy to give because you already have a relationship with the corporates, and this has a large business for SBI.
So we haven't seen that big uptick coming here. Suffice to say that I think this may happen in this particular quarter. There is a lot happening in the road sector, and the good part, of course, is that real estate has come back very, very strongly. So all the leading indicators are there, whether it is power consumption, the GST numbers, the cement consumption, so on and so forth. Digital payments, again, are doing very well. So we remain very confident that economy is on its way to recovery.
Okay. Last couple of years, Mr. Bhatia, have been tough for corporate India. That has also resulted into high NPAs, and banks have really taken the brunt. But now, do you think incrementally things will be better, or they will be dramatically better? Because NPA provisioning is done. Corporates have cleaned up their balance sheets. Banks have also cleaned up their balance sheet. So whatever incremental business, whether it is working capital or CAPEX, that may actually translate into a new credit cycle. Am I being too optimistic here, or would you share your optimism with me?
I would like to believe it that way. So the cleanup has largely happened. The stress that we faced between 2016 to 2018 or so, that is behind us. And the books are pretty clean. The provisioning is on a very high side. And I feel confident that at least the large names or the big ones, they will not fall. I'm pretty clear on that. Number two, of course, is the issue of governance. So many of the big ones that have fallen, they have not fallen because of business reasons. They've fallen for some other reasons. So I think the cleanup that was needed in the system has happened to a very large extent and very, very significantly. So I feel very confident that, at least on the large exposure side, the corporate side, things look much better now.
Time and again, Mr. Bhatia, State Bank of India has been asked questions by investors and analysts that how are they planning to address their cost to income ratio? How are you planning to address that?
We do realize that our cost to income ratio is high. Currently, it's in the range of 51 to 52%. So the cost is something that many times we have no control over, and a very large part of that is on account of our pay structure, the salary structure. So the only way to improve that ratio is to increase the income. So that is the effort, trying to increase other income, other revenue streams. And I would believe that going forward, in the next 2 to 3 years, you will see our cost to income ratio come to, maybe close to 46, 47%. That is the target internally. If we are able to do that, that will make us and our investors, I guess, pretty happy, on the whole thing. But yes, there are some structural issues, the pension bill, for example, or the salaries, that will actually also start tapering off after some time. So we are confident that we will reduce that number also.
Mr. Bhatia, State Bank of India has a high employee cost, but given that transactions are moving digital, the fact that automation and AI has taken over, the relevance of bank branches is only reducing, the number of people who are doing an activity you require less because of machine. How do you see incremental hiring and fresh things now changing for State Bank of India? Because if that is one legacy cost, technology in a sense could change it. Because if your net hiring also reduces, then in future your pension, other liabilities, everything comes structurally down.
Yeah, so the pension and all for the new employees is not an issue at all because they are covered under NPS. So that liability is not on our balance sheet. So I think that started from about 2010 or 11 or so. So all the new employees go there. So the liability on our books is not there. But coming back to your question on branch banking, so the branches that we are opening currently are small branches manned by not more than 2 or 3 staff members, one officer plus 2 or something like that. We think that that is an optimal model going forward. I mean, today we do more than 90% of our work on the internet digitally. Going forward, that number will, say, inch towards 95% or 100% or not. We need branches for advisory. We need branches for cross-sell. We need branches for upsell. And to tell you very frankly, today, many customers are looking for products beyond banking also. So, I mean, you may be aware that SBI Mutual Fund recently crossed the landmark of 5 lakh crores in AUM. So, customers are looking at differentiated products also. They're looking at insurance, they're looking at credit cards. So, that will be a place where customers will address issues that may not be related directly to banking, but maybe to their investment portfolio, to mutual funds, to general insurance, to life insurance, so on and so forth.
Now, State Bank of India, Mr. Bhatia, has taken subsidiaries public, unlike a lot of other banks who have not taken a lot of subsidiaries public. Your last deputation was SBI AMC. When you took over, it was number 3. When you moved back to SBI, it became number 1. My question to you is that when do you see SBI AMC or MF going public?
We are looking at maybe sometime around next fiscal, towards the end of next fiscal. If there is a company that can go public, it is SBI Funds Management.
Next fiscal, aren't these the right conditions? It's a profitable AMC, markets are right, your AUM is strong, you would get the right valuations if you go, let's say, public this year itself.
Yes, I would think so. We should get a decent valuation, although we haven't put a number to it. But the investor interest that we are already getting informally is strong.
When I look at the valuation, what other tech platforms are commanding, some of them are actually loss-making. Is going to be hitting a break even very soon. That is my understanding of Is there a plan in place that where State Bank of India will come and surprise everyone with their digital offering? I mean, it's going to be one against all if, as you know, goes public.
So again, not an easy question to answer whether we can take Yono to a subsidiary. There are issues on data, on client data, on security, on so many other issues. So we have been pleasantly surprised with the response that Yono has got and the number of hits it gets on a daily basis. Uh, at times, we have even crossed about 12 to 15,000 hits per second. That is at the peak. And you'll also be surprised that on the commercial side, more than 85% of our letters of credit LCs, now these are import LCs, overseas LCs, are also being now done on the Yono platform. So what we had envisaged Yono to be initially and what it is now, it's a totally different product. And it's become a platform for convenience. It's become a marketplace. We think we should be able to do more products on it. And to my mind, sure on the listing part, that can be examined, of course, but there will be certainly some issues on regulation and so on and so forth.
Okay. Just to wrap it up with a very broad question for the mass audience, State Bank of India fixed deposits 3 years ago, 3.5 years ago, were at 8.5. That number has come down to 5, 5.5, 6 in different categories. Do you think fixed deposit rates in India have they bottomed out, or looking at the liquidity, there is still room for it to go lower?
So fixed deposit rates are always a function of, number one, the liquidity in the markets, and they're also a function of inflation. And most importantly, they're also a function of what the competition is offering. Our current rates are the lowest in the market. I think we are at 5% for a 3-year deposit. And we haven't seen any slowdown there. But as I told you earlier, customers today do look at alternatives, to invest. So anybody who has invested in mutual funds currently, or they did it at the start of the year when the markets were down. So those opportunities are also being looked at by customers. Your question whether rates have bottomed out, I would think so. Yes, they have bottomed out.
I can still see that, sir. Now that you've come from SBI AMC, your love for asset allocation diversification has really changed.
I think it has, of course. I think it's good for the customer. It's good for the nation. It's good for the markets. And it's the way, that's how the financial markets can actually be developed over the long run. So I think there has to be a good balance between the mutual fund industry, the banking industry, the life insurance industry, and if we can all play our roles, it'll be great. It'll de-risk the banking system also to a very large extent.
Just to wrap it up, Mr. Bhatia, with one question I've been wanting to ask you. I haven't got a chance to meet you in personal because of COVID. What is one big consumer insight you would like to share with us, which you think was not there before COVID, but COVID or other aspects have really, brought that insight or trend out?
So at State Bank of India, I would think that the franchise matters, the trust matters, and the insight is that people are willing to change, they are willing to experiment, and they are willing to do things differently. And as producers of products, we need to be ready for products that actually are easy to use and are simple to use also. So all products have to be counted on the number of clicks, if I were to use. that phase.
Well, Mr. Bhatia, we started with exchanging New Year pleasantries. Today is Makar Sankrant. It's a big day for South Indian festival season also. So what a great day to have you on the show, and wish you best greetings for other festivals as well.
Thank you very much, Nikunj.